Wall Street ends lower as November jobs report paints a weak picture of the U.S. economy. The Dow slips 300 points while the S&P 500 was down 0.25%. Asian markets opened mixed while GIFT Nifty is suggesting a lower start for the Indian market. Oil prices rise after U.S. President Donald Trump ordered a blockade of all sanctioned oil tankers going into and out of Venezuela, while gold inches up as U.S. unemployment rate rises in November, reinforcing bets of rate cuts by the U.S. Federal Reserve. The insurance amendment bill clears the Lok Sabha's hurdle. The Finance Minister Nirmala Sitharaman says that the country needs insurance to be more accessible and enhancing FDI limits to 100% while enabling global insurance to inject substantial capital directly. The Petroleum and Natural Gas Regulatory Board has rationalized the unified tariff structure for natural gas transportation to encourage wider adoption of CNG and PNG effective 1st January 2026. Under the revised framework, PNGRB has reduced the number of tariff zones from 3 to 2, that is up to 300 kilometers and beyond 300 kilometers. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. Thank you so much, as always, for tuning in. Let's talk about what's happening in the Asian markets this morning. US was a bit muted in terms of the trading session. We had the economic data that came in, so nothing exciting happened. That futures of the US market also indicating a bit of a red on the screen. Asian markets, we're seeing Taiwan index that's holding on to gains of 0.6%. Hang Seng that's holding on to gains, a very slight bit of a positive bias, 0.09% gain that's coming over there. Now, when you look at the Australian index, on the other hand, that's opened up on the negative side. So Australian index is down almost 0.3% in the trading session as of now. Shanghai, bit of a red was there on the screen, and then now it's moved to the green. So we'll watch out for that as well. A lot of investors are watching out the Japanese trade data as well. So we'll keep an eye out on a Nikkei in the trading session. That was very flat as well. We had topics that saw a decline of around 0.3%. South Korean index also is something that we're keeping an eye out on in terms of the Kospi. So bit of a mixed start is what's coming for the Asian markets. Now let's pull up what the Nifty implied open, the GIFT Nifty is indicating for our Indian markets. Nifty implied open is indicating a very muted start today for the Indian markets. A 14-point decline is what we're keeping an eye out on. Do not forget, last couple of days, we've seen that the Nifty has actually closed in the red. So that is what we'll keep an eye out on. Now today, whether we see the recovery coming back or whether we're going to continue to see the bit of a muted day for the Nifty is something we'll watch out for. As of now, the indication is a muted start, 14-point decline for the Indian markets. But let's move on and talk about how these overnight cues are going to be impacting our Indian market. We have a team of research joining us to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, let's go across to Gaurav, who's here to tell us the important market cues for today. Good morning, Gaurav.
Well, yes. When we look at Nifty, yesterday we saw Nifty actually decline almost 0.6%, and at the same time it breached that 25,900 mark. Now, what is important to watch out for, the next support level comes at around 25,750, and at the same time for Nifty to sustain and keep the bullish momentum, it has to breach that 26,000 mark. That is also a psychological support for Nifty. Other than that, yesterday was also casualty for all the indices. Almost all the indices actually ended up in red. In fact, the biggest loser was Nifty Realty. It declined almost by 1.3%. So let's see if there is any chance of revival in this index. Key thing to watch out is that first is that US crude now that slipped below $56 per barrel, and this is actually the lowest level if we have seen since the early 2021. And if you look at the YTD losses, they are also at around 22%. So that is very important. And on the back of that, we will watch out for OMCs as well as the paint stocks. Other than that, let's also not forget that yesterday was a day when rupee actually breached that 91 rupee mark, and that is something that we will also be watching out for. Is there any downside again for rupee in today's trading session as well? Remember, experts believe that FPI selling is a key reason. So let's see if there is any revival in the near term. Apart from that, if you look at stock specific names, some of the names to highlight is that first is Sanman Capital. Now, it is not a direct news for Sanman Capital, but IHFL, which is India Bulls Housing Finance, it is going through a court proceeding. Last time we saw there was a proceeding and that impacted the stock of Sanman Capital wherever. In fact, it was not actually related to the stock. So that is something that we should be watching out for. Indigo is also on our radar because Parliamentary Standing Committee is going to have a meeting with Indigo and DGCA today because of the chaos that happened in Indigo flights. Lastly, if you look at some of the other names, Axis Bank, Policy Bazaar, Eternal, all these stocks are on our radar today because yesterday we saw a sharp fall in these stocks. And lastly, from the IPO market, let's not forget Park Medi World. This company will get listed, and Nephrocare Health. Now, this company will also get listed in the market today.
Okay, Gaurav, thank you so much for that. We'll keep an eye out on all those stocks today, even those IPO listings. Thanks so much for that. But let's move on and talk about more stocks that we're keeping an eye out on the back of news flow. Upasna, over to you. Good morning.
Good morning, Vinny. First up, let me start with Indian Overseas Bank. Now, government to sell nearly 2% equity via OFS, and the floor price is set around 34 rupees per share. Shriram Finance also in focus as board meeting is scheduled on 19th of December to consider fundraise. Next up is Keynes Technology announces a strategic partnership with Mitsui and AOI Electronics to strengthen India's semiconductor ecosystem is what the company has indicated. Glenmark Pharma also in focus as the company secures exclusive license and distribution agreement with Hano Pharma for a lung cancer drug in select markets for a total cumulative payment of nearly up to $1 billion. Eclairic Services also in focus as the buyback price has been increased from 4,500 to 4,800 per share. Ola Electric is the next one on our radar. Bhavesh Agrawal sells nearly 0.6% of the stake in the company via block deal, and the company says that the founder sold the stake to repay promoter level loan, which is nearly about 260 crores. Vari Renewable, also the next one on our radar. The company's unit has executed a PPA for a 300 megawatt ISTS connected solar power. NBCC also in focus on the back of order win. The company has received order worth 345 crore. Next up is Ahluwalia Contracts. Again, on the back of the order win, the company wins order worth 888 crore from Bihar State Tourism Development and Cooperation. And lastly, coming to Axonomal on the back of block deal, according to our sources, Imperial Chemical Industries is likely to sell about 9% stake in the company. Offer size is nearly about 1,300 crore and floor price near 3,150 per share. So all in all, we'll be watching out for all these stocks in today's trading session.
Okay, Upasna, thank you so much for that. But in our final update, what are the important cues in the world of F&O? Let's go across to Mangalam. Mangalam, good morning. You're wearing green. Should bulls expect some positive signs today?
I'm not sure because yesterday I was wearing red and there was a big decline in the market, which is exactly why I wore everything green today, hoping for bulls to get some recovery. But tell you what, the Nifty Bank, the mid-cap index, all of them ended lower yesterday. The advanced decline ratio as well, firmly in favor of decliners. Nearly 2 stocks fell for every stock that rose yesterday. And now the GIFT Nifty, that comes up for you. That too is indicating a slightly flattish start, but we're closer to support than we are to resistance. So that is something that will make the markets feel slightly better. Why is that? Because the 50-day moving average of the Nifty very close to the 25,800 mark. What we need to know whether the bull run continues or not is when the Nifty Bank crosses the 20-day moving average of 59,300. So those are two important levels. At the lower level, 50-day moving average for the Nifty, and at the upper level, 59,300 for the Nifty Bank. Cash market flows. The rupee is at a record low. Understandably, the FIs are selling. So 2,400 crore worth sale yesterday in cash markets, yesterday in index futures as well. They sold about 1,800 crores, unwound 2,600 longs and added about 6,300 shorts. So what this does is takes the FII exposure back to sub 10% on the long side. So from around 19% at the start of the series, it's constantly been coming down. Right now, FII long exposure stands just at 9%. Typically, when it's so one-sided, there is a bit of a reversal. Especially close to such support levels. So that is something we'll be watching out for very, very closely. 26,000 call and 25,900 call, both of them active, telling you upwards of 25,950 to 26,000. There could be some supply, but at lower levels, 25,900 put writers are very active, telling you once again that the 50-day moving average on the Nifty of just under 25,800 is an important support.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on those levels over there for the Nifty Bank Nifty as well. But let's move on. And the Lok Sabha has approved the Insurance Amendment Bill. Now, this allows foreign companies to own up to 100% of Indian insurance businesses. The government believes that this will bring more money into the sector and make it stronger. The bill also introduces changes to improve how insurance companies are run and to increase insurance coverage across the country. Let's listen in to what the finance minister had to say.
percentage of FDI and the number of insurance companies. In 10 of them, less than 26% FDI is there. I said total of 74. In 10 of them, less than 26%. In 23 of them, between 26 to 49%. In 3 of them, 49 to 74%. And at 74%, there are 4 of them who have FDI at 74%. Sir, there is need for growing protection through insurance in this country. We need to have insurance more accessible. Enhancing FDI limit through Section 3AA of the bill to 100% will enable global insurance to inject substantial capital directly without waiting for domestic partner to invest capital in parallel. The maximum limit of penalty on insurers for default in complying with or acting in contravention of the Insurance Act or the regulator IRDAI Act has been proposed to increase from 1 crore to 10 crores. Now insurance intermediaries have also been included under this provision. This would act as a deterrent and encourage legal and regulatory compliance. An entity, for instance, engaged in the business of insurance will have to categorically use the name insurance, assurance, insurance company in their names. You cannot operate anymore by not having the word insurance or assurance in your name. So it will directly relate to the common people saying, oh, this is a recognized insurance company. Without mentioning the word insurance, a lot of questions are raised as to, are they genuinely in the business of insurance? Who are they? Are they doing it? So on. So similarly, sir, an insurance intermediary will have to necessarily indicate the nature of its business and service to identify itself with the kind of services that it extends. LIC will have greater autonomy. We are providing autonomy to LIC to open zonal offices and aligning compliance for its foreign offices with the laws and regulations which prevail in the respective jurisdictions. Now, even if they want to open one zonal office in an area where business is thriving, they will have to come to the government, seek the permission, the files move up and down, and then the permission is given, and then they go open, by which time months pass. Whereas if it is given to their own board, decision can be a lot more professionalized. We are also empowering the regulator. This is very important, because many members thought we are empowering the regulator. It's so empowered. It is empowered for a very good thing. That is, disgorging wrongful gains. When most of the time wrongful gains happen and somebody's gained it, you don't have the statutory power to disgorge that and give it to whoever have been made to suffer. Now this one will give that power to the regulator to disgorge wrongful gains from insurers and from intermediaries.
We also spoke to a whole host of experts on the insurance amendment. Listen into what they had to say.
We have been making our position clear on open architecture. More than the insurance companies per se, yes, insurance companies also had its own benefits to look at. But looking at how the customer should be served, it is difficult for an individual to be knowing the products, multiple products of many life insurance companies and going and presenting the right product to the customer. It was not going to be an easy task. An agent representing one life insurance company would have been beneficial for the agent as well as the end consumer as well. We were requesting the government for making this provision available, and I'm sure the government had taken a stand, and open architecture, which was originally proposed or it was being talked about, is not part of the current bill. Certainly LIC stands to gain the sense, as you said.
The fact that we weren't necessarily entirely comfortable on multi-tied agency, given the fact the amount of money that is spent on an agent can vary between 15 to 25,000 rupees that a company spends on training an agent over 3 to 5 years. So that was a little bit of a tricky one, and I'm happy to see that it doesn't find the light of day here. The investment guidelines have been made a lot easier, is very good. I'm particularly excited about the fact that we can now invest in private limited companies, which usually are the companies who have invested in technology and can get early investment, and not just do they gain, but even we gain at the same time.
When it comes to distribution network to be broadened, the IRDA already permits that. Almost about 8 such banking institutions they can tie up with. So this will be really maintained. So the other piece is the merger of the non-insurance with the insurance. There also, I believe, the regulation can come in where they can probably lay down that, if at all any such thing happens, what are the precautions which needs to be taken, and how they will ensure that the liabilities of the non-insurers should not really get into the insurance companies. There can be a firewalls which can be created to really address this concern also.
Okay, and those are the views coming in on the new bill that was tabled and approved at the Lok Sabha. But let's move on and actually step into a very short break. Up next, we'll get to action from the Wall Street. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's talk about the U.S. markets. Wall Street closed mixed with Dow Jones dropping almost 300 points. The S&P 500 slipped almost 0.2% in the trading session, while the tech-heavy Nasdaq Composite Index was the outperformer and managed to close in the green. Let's go across to CNBC's Seema Modi, who is here to give us a wrap on what happened on Wall Street.
U.S. markets were mixed across the major indexes in Tuesday trading as a new jobs report fuels concerns about the state of the U.S. economy. The Dow dropped 302 points, S&P 500 falling 16. The tech-heavy Nasdaq was up by 54. Now, the delayed November jobs report from the Labor Department came in better than expected on Friday, adding 64,000 jobs, with 46,000 of those jobs coming from the healthcare sector. But October showed a loss of 105,000 jobs. The unemployment rate also ticked up to 4.6%, a tenth of a percent higher than expected, and the highest level of inflation in 4 years. And tax credits that reduce the cost of Affordable Care Act health insurance for more than 20 million Americans now look likely to expire at the end of the year after House Speaker Mike Johnson on Tuesday said there would not be a vote to extend those subsidies. However, some moderate Republicans have expressed interest in extending the cuts, which they could do by joining the Democrats' effort to force a vote on extending them. The tax credits were eliminated with the Republican majority's passage of the president's One Big Beautiful Bill over the summer. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But now it's time for our special segment, Trump Watch. And let's start off with that. What President Trump has spoken, he's continuing to highlight strong U.S.-India ties. He said that India is an important strategic partner for America in the Indo-Pacific region and added that U.S. has a great friend in PM Modi. Now, shifting focus to trade, Trump touted recent data showing U.S. tariffs have slashed the trade deficit by more than half, larger than anyone except him projected it. He urged that the Supreme Court is to uphold they should uphold the tariff that they're talking about for national security as well as financial freedom. Let's move on to the next part. In terms of the foreign policy, what were his comments that came in? President Trump has designated Venezuelan regime a foreign terrorist organization and ordered a blockade of all sanctioned oil tankers entering or leaving the country. And this was a post on Truth Social by him. And finally, in the last update that we have, this is a Reuters report that we are talking about. They have highlighted that the U.S. has paused a $50 billion technology agreement with Britain over concerns about London's digital regulation and food standards. That's an important update that's coming there as well. But that's all the update that we have today for you all on Trump Watch. We'll come back with more tomorrow as well. On that note, we're going to slip into a very short break. Don't go anywhere. On the other side, we'll talk about commodities. Stay tuned for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha to get the latest update on what's happening in the world of commodity. Manisha, good morning. Trump has surely made comments coming in for the Venezuelan side, but what are we keeping an eye out on today?
Well, yes, I'll start with the crude oil prices itself. So yesterday evening, we fell to a 5-year lows when it comes to crude oil prices. It was a 3% of a decline in the overnight market. But since the statement from the U.S. president has come in that there should be a total and a complete blockade of sanctioned oil tankers linked to Venezuela, there is a bit of a support that we've seen come in for the Brent crude oil prices, but not enough to take the prices back above $60 a barrel, because the markets are looking at weak demand coming in from China, Middle East, and U.S., and then you have OPEC plus and non-OPEC countries as well increasing production. So we are faced with a concern or a situation where you're looking at higher supplies, and that would continue to weigh on crude oil prices. But what continues to rise and shine bright is the silver prices. Yet another record high is how we are trading in the Asian markets, where silver prices are now trading above $65 an ounce. And with this, we are up by 122% for this year when it comes to silver. So the best performance clearly comes in from silver, and even today in Asian markets.
Okay, Manisha, thank you so much for that. Surely we'll be keeping an eye out on the precious metals as well as crude oil. But on that note, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, your Bazaar Morning Call.